What's up, guys? It's Tobi Rosario, and in today's video, I'm going to talk about how I was able to purchase a duplex with using business credit, essentially none of my own money. All right. Now, before I get started, don't forget to subscribe. Hit that bell notification. That way, you get notified whenever I post a new video. Also, give this video a thumbs up. Give this video a thumbs up. It does help with the algorithm, right? Now, if you're a previous, or if you're like a subscriber that's been with me for a while and you watch my older videos, you see I've been talking lately a lot about business credit and why it's a game changer. You can use that as leverage, and you can purchase real estate using business credit, right? So what you have to do, obviously, you need to have a good personal credit score in order to apply for business credit lines. Now, the benefit of a business credit line is that, number one, the credit line's utilization does not report on the personal side. So you can have a $50,000 credit card, run it up all the way up to $50,000 and does not affect your personal credit score at all. Okay, so that's really a benefit. You can Another benefit is you keep the things separate, right? You keep your business and your personal separate. Another benefit is that you get cash rewards, you get reward points, you get cash back, you get all sorts of things, right? And the other benefit, if you have a 0% interest business credit card, you pay 0 interest, same as cash. I'm gonna say that again. If you have a 0% interest business credit card, that's the same as cash because you pay 0 interest. Don't let that go over your head, guys. So essentially what happened, I was finally I was able to close on a duplex. I was able to close on a duplex. This has been going on for, I would say, 6 months. I had 2 deals fall apart. Long stories, so I'm not even going to get into that. This is actually a long story. I'm not going to get into that. But essentially, I was able to close on this property. I just closed on it last week. And what I've been able to do was, so you're going to have to, so how it all works is, so when you're doing it through traditional banks, they want to see the money in the bank, right? They want to see the money in the bank and they want to see it seasoned. So it's not like you can, so let's say you have, an example, let's say you have a $20,000 credit card, right? Let's say this is a $20,000 credit card and you wanted to take the money off the card. If you wanted to take the money off this card, which you can, there's ways to do that. So I wanted to take the money off this card, let's say that $20,000, I would have to put it in my bank and let it sit there for at least 60 days, right? You don't want to, liquidate $20,000, put it in the bank, and then apply for a mortgage because they're going to ask you, where did that come from, right? So the trick is to let it season there for 60 days, and then you can apply for a mortgage, whether it's whatever, FHA conventional, you're going to have to let it season there for at least 60 days. They want to see it in there for at least 60 days so they won't question where that came from. So that's what I did. I liquidated a credit card. I had some money in my bank for at least 60 days. So they didn't ask where did that come from. And what I did was I used that as the down payment. So this duplex, each unit rents, one unit rents for $1,100, the other for $900. Now the thing with that is it has a garage. I can rent that out. It has a basement. I can essentially make me rent that out. So it's the cash flow is going to be amazing. And then what I'm going to do is use that rental income to pay down the debt. And because the debt is at 0% interest, I'm going to be making payments towards the principal, right? It's not going to be all interest. I'm going to be making payments towards the principal. And then I can do this over and over again. I can purchase another property, even through hard money or whatever the case is, or another traditional financing through a bank, as long as I liquidate the credit cards and let it season there, let it stay there for a few months. That way they don't question where that money came from. You can use that as down payments to, let me stop flashing my card because you guys are real tricky with it and you might be able to see that. So again, what you want to do is you want to liquidate that card, right? You want to take the money off the card. You want to take the money off the card and then put it in the bank. And then when you apply, you're going to use that as the down payment, and that rental income, you can use that to pay down the debt. Another thing you could do is, what I plan to do is a BRRRR, right? So buy a property cash, which you can do with credit cards. You can buy a property cash, and then once you buy it cash, you use the credit cards as well to rehab it. And then once you rehab it, put a tenant in, and do a cash out refinance, pay back the credit cards, and then you can just rinse and repeat. Tenant's going to pay down the mortgage, pay down the debt, and you can just keep doing that over and over again. Does that make sense, guys? Let me know in the comments if you guys have questions. I'm very excited about this year because I'm going to keep using this strategy to buy some rental properties, do some fix and flips. I'm going to do a fix and flip, essentially using business credit as well. And I also plan to do some burrs to get some rental income. That's my time. My name's Tobi Rosario. Peace.